Your investment portfolio might feel like a roller coaster, swinging wildly while your heart races with every dip. You may see yourself as a wolverine fierce and unstoppable in the market. However, this mindset could lead to your biggest downfall. Many investors chase profits with relentless intensity, but a hidden danger lurks beneath the surface. This intense desire for gain can blind you to critical risks. Have you ever paused to consider how this relentless pursuit impacts your decision-making? Imagine being so consumed by the thrill of the next big trade that you ignore the warning signs. Suddenly you find yourself clinging to a sinking stock, convinced it will rebound. It's not just about having a strategy, it's about understanding your psychology. Every choice you make is influenced by fear and greed, a toxic mix that can cloud your judgment. When was the last time you truly questioned your gut feeling before making a risky decision? Consider a friend who dove into a high-risk investment certain it would soar. Instead, it plummeted, leaving them with nothing but regret. This is just a cautionary tale, it's a reality for many who fail to step back and assess their approach. As you pursue returns, you might overlook emotional triggers. Those adrenaline spikes during market surges can distort your judgment. Have you ever made a decision in a moment of excitement, only to regret it later? Now let's raise the stakes. Imagine being so entrenched in aggressive trading that you risk not just your money, but also your peace of mind. Stress levels soar, relationships suffer, and you find yourself trapped in a cycle of anxiety because of a mindset that prioritizes profits over stability. So, what's the solution? It's about finding balance. Shift your focus from purely aggressive strategies to a more well-rounded approach. Embrace patience and recognize that sometimes the best move is to take a step back and breathe. True strength in investing isn't about how fiercely you attack the market, it's about knowing when to hold back. You don't have to be a wolverine to succeed. Recognizing your psychological traps could be the key to long-term success. As you reflect on your strategies, ask yourself, are you truly in control? Or is that aggressive mindset leading you down a path of unnecessary stress? Rethink and redefine what success means to you. Your peace of mind might just be your most valuable asset. What if I told you that your desire to grow your wealth could actually be your biggest enemy? Surprising, right? In the world of investing, your mindset might be setting you up for failure. Many believe that aggressive investing is the key to financial freedom, but there's a darker side. It can become a psychological trap, leading to serious mistakes. Curious about what this means for you? Let's dive in. Imagine this: you just received a substantial bonus at work, and your instinct is to invest it all in the latest trending stock. Tempting, isn't it? But what if your excitement blinds you to important risks? This is where many investors stumble without realizing it. There's a hidden psychological pitfall in those bold moves: the feeling of invincibility, the belief that you can outsmart the market. But what if that confidence is merely a mask for a fear of missing out? You might think you're being clever, but in reality, you're walking a tightrope. Now, picture yourself at a dinner party where everyone shares their big wins in cryptocurrency. The pressure builds, and you feel the urge to jump in to prove you're savvy. But that rush can cloud your judgment, setting you up for a major fall. Here's where it gets serious. When you're overly aggressive, your emotions can dictate your decisions. You might panic sell during a market downturn or cling to a losing stock because you can't bear to accept the loss. Can you see how quickly things can spiral out of control? The good news is that a shift in mindset can make a significant difference. Instead of chasing every high, take a moment to step back. Slow down and reflect on what's truly motivating your investments. Is it ambition or fear? As we wrap up, consider this: aggressive investing can feel exhilarating, but it often leads to dangerous drops. Be mindful of your mindset. Take a moment to breathe and evaluate your motivations. If you're ready to invest with purpose, keep exploring and refining your approach. You might discover a path to sustainable growth without falling into psychological traps. Remember, it's not just about the money, it's about how you think about it. Have you ever felt that strong urge to dive headfirst into the stock market, convinced that every bold move will lead to a big payday? It's exhilarating, right? But what if I told you that this aggressive mindset could actually be your biggest hurdle? Picture this: you've watched countless videos about the latest investment trends and can't wait to make your move. But lurking beneath the surface is something you might not even notice. Everyone talks about the thrill of winning, but what about the darker side of that excitement? Many don't realize that an overly aggressive money mindset can blind you to critical mistakes. Imagine pouring your savings into a hot stock without considering the fundamentals. The rush feels amazing, but is it based on solid ground or just the adrenaline of the chase? Think back to the last time you rushed into a decision. Maybe it was a flashy new tech company. The excitement was palpable, and the returns seemed guaranteed. But then the market shifted, and what felt like a sure thing quickly turned into a painful loss. This isn't just a story, it's a reality many investors face. The hidden psychological traps of this mindset can lead to poor choices. You get so caught up in the thrill that you forget to pause and reflect, and that's where the real danger lies. But what if you could harness that energy without falling into those traps? Imagine channeling your eagerness into a strategy that balances caution with ambition. What if you took a moment to truly analyze your investment? Instead of diving in headfirst, you could create a plan that allows for growth while protecting your assets. As the tension builds, remember that every decision you make echoes in your financial future. The stakes are high, and the choices you make today could lead to either success or unexpected setbacks. This isn't about avoiding risk altogether, it's about transforming that rush into a thoughtful approach. It's about becoming a savvy investor who understands